What's up, everyone? It's Austin Doty here with another market update for you on Wednesday, August the 14th. So we are taking a look at the S&P 500, the E-mini futures. It's been a rough day for the S&P, down about 3%. But if you've been following along, we've been expecting this. I've been calling this market lower for about a week. I have videos last week where we talked exactly about this scenario. We predicted the area that it would turn lower from, which was this 2930 to 2940. And now it appears that we are well on our way lower after a bit of a fake out yesterday. So I want to quickly touch on that. So I believe there was a news article that came out that talked about the tariffs being delayed until December. I guess that'll save a bit of the holiday shopping season, but really all that was a great excuse for large traders to enter positions to the short side here. So in general, anytime you see a formation like this, you will probably see a lot of retail traders entering short positions. And when they do, they're going to place their stop loss right above this previous high. And so once this market started to turn lower, especially a lot of these traders will move their stops to break even or just above the prior high. Well, market makers know that, large traders know that, and they use the liquidity of those stop losses to enter their limit sell orders. And now this market's trading lower without a lot of people on board, but with some of the larger players on board. So seeing the move that we saw yesterday, didn't really bother me at all. I knew exactly what was happening. I didn't really appreciate my order being retraced all the way back to even, but I certainly didn't exit my position. And someone was asking me if I do trade my own analysis, and of course I trade my own analysis. So here's my positions. You can see them there. I am short this market, and I'm holding. So what we have now is the reason I want to talk about these liquidity zones is we're going to see it come into play near this low here. So if we go to the weekly chart, we can see that last week we had a pretty bullish looking candle by most people's standards. A very long wick in general indicates a bullish price action. So there's probably a lot of traders that have gone long and their stop loss is going to be below last week's low. And we'll see that come into play most likely next week. And I'll come back to that here in a minute. But while we're on this view, I'll show you the two fractals or maps that I have laid out and what to continue to expect heading forward. So here's one pretty good map. The orange map here has a bit more of a shallow B wave. We saw a pretty nice bounce in the S&P last week. So here's an example with a more shallow B wave, and then if we use our green fractal here, we can see a B wave similar to what we saw ourselves, and a very extended C wave here. So this would have the market trading down towards the 2540 handle, where the other fractal would have us somewhere around the 2640 handle. But in any case, we don't really need those maps as much anymore because the B wave has completed in the market right now, and we can measure our targets to the downside. So if we measure those out, that might not be exactly correct. Let's see if we can get it exact. So we should be looking for roughly 2690 and a half for a C wave lower. So we're expecting this market to trade down into this area. And at that point, that should be later in August, probably the last week of August or so. And at that point, I do like going long this market. And now we can kind of come back and I'll talk to you a little bit about the liquidity zones. So we mentioned there's going to be a little bit of a liquidity zone below last week's low here, but there's going to be a gigantic liquidity zone right in this area, not quite that big. Below the June lows that we saw earlier this year, same concept. There's going to be a lot of stop losses that are sitting there. It also just so happens to be the equality move for this C equals A, which is what we've measured out and drawn in previous videos. So we can see that the market's going to trade down into this zone. There's going to be a lot of liquidity there. And most likely you're going to at least get a bounce out of that area. And as a trader, that's really all you need is a bounce in the right direction, and you can be off and running. So that's what to expect. And yeah, good luck. And just a little bit of quick info about myself. So yeah, this YouTube channel is Palm Valley Trading. I do have a website now, which is palmvalleytrading.com. You can read my little bio here and see a bit more of my analysis and some of the things I'm planning to offer in the future, which is education and mentoring. And if you are interested in a managed account, I'm listed on the Interactive Brokers platform as a money manager. I'm a CTA registered with the NFA, and I operate as Palm Valley Investment Management. So yeah, if you have any questions, shoot me an email, send me a message on here, and let me know.